Good day to you guys. In this video, I'm going to teach you about market makers buy model. So market makers model is introduced by MMXM trader. You can find him in Twitter. Here you guys can see it's Twitter page over here. So market makers model, which is simply something like this. So when it comes to market makers model, there are two modules in this main model, which is MMBM market makers buy model and MMSM market makers sell model. So in this video, I'm gonna prioritize on market makers buy model mainly because the same scenario can be converted into market makers sell model. So it will be easier if I explain you guys about market makers buy model. So usually market works according to the liquidity. So where the liquidity is, market will purchase them. So over here you guys can see this is the sell side of the curve and this is the buy side of the curve. So the sell side of the curve consists of original consolidation and some accumulation phases. So these accumulation phases are here for engineered liquidity. So most of the time there are 3 to 5 accumulation phases in a curve. So after that the curve is ending, so that box we call it origin of the curve, or else you can call it turning point. So after that there are first distribution and second distribution and maybe third and fourth likewise. So after that final drawn liquidity is considered as the original consolidation of the previous curve, and after taking that the market makers model is completed. So according to ICT, second stage distribution phase is considered as the silver bullet. So I'm not talking about 3am, 4am and 10, 11 silver bullet. This is somewhat which is coming from market makers model. And in here origin of the curve, it's better if you guys look for TABDA, time and price PDRA, but mainly focus on order pairing and smart money reversals. And when it comes to the risk tolerance in this model, you can go for a low risk entry in origin of the curve, and in first distribution it's better if you guys take low risk because most of the time it is not confirmed. And I had to tell you something like this: most of the time one shot one kill entry model will form in this first distribution phase. If you guys are framing this trade according to the weekly profile, you guys know one shot one kill trade setup will form in this first distribution phase. So after that, when it comes to second distribution phase, you guys can use a moderate risk, which means like 1%, 2%. So it is actually worth it, guys, because if you guys are willing to make 3%, 4% a week, it's better if you guys play out this level of model like 2%, like second distribution phase. You guys can easily risk 2% for this trade actually. Yeah, so it's better to have a idea about internal and external range liquidity concepts if you guys are willing to take the bias idea from weekly and daily using liquid runs, which means internal range liquidity and external range liquidity. So here in GBP USD chart, I can show you guys some few examples. So over here you guys can see here it is the external range liquidity. Wait a minute, go to daily time frame. So over here you guys can see here the external range liquidity is pushed out, and I'm waiting for the reversal back to the internal range liquidity. So most of the time internal range liquidity will be a order block or as a fair value gap. So in this case it's a order block, daily order block over here. So after tapping into that zone, I have to confirm that the price is turning or as the order flow is shifting. So how do I do that? I have to make sure that the price is doing a smart money reversal and an order pairing. So over here you guys can see there's an order pairing. Here it's order pairing. You guys can see all the sell stops have been taken out and the market structure shift is there. 1 hour market structure shift is there. So then it is considered as an order pairing. And also there's a SMT or a smart money reversal over here. You guys can see if you guys tolerate this chart with Euro USD, because since I'm in GBP USD, you can look for smart money techniques in Euro USD chart if you guys are willing to take trades on GBP USD. So for the confirmation entry or as for the low risk entry, I can say that if the price is respecting to bullish PDRAs and breaking highs like this, then most of the time the price is bullish. That means order flow is bullish. So over here easily I can take a trade using 2022 entry model, and yeah, you guys can see if I take a trade over here and wait for time confirmations. Usually I take trades somewhat close to 10 a.m. which is London, which is silver bullet hour in New York session. So over here you guys can see I can easily take a trade targeting this this area, right? Yeah, somewhat like here. You guys can take trades like this. So I recommend you guys to stick to what do you call that, distributed ratio. Since I'm using 1 to 2, it's okay to use 1 to 3 and 1 to 4, but if you guys are if you guys are willing to take trades like 3 or 4 trades per week, so it's better if you guys stick to 1 to 2, because if you guys are risking like 1%, 2% is easy, like 2% is reasonable, and it's better if you guys are hitting up with 1 to 2, and the win rate will make a huge difference in if you guys are reducing your residual ratio. And yeah, so this is how the market works, and I can show you guys some few examples more. So over here I'm targeting this range, so see how it goes. It's Friday, Sunday, and yeah, Monday over here. Let's see, I'm looking for buys actually. So in the 1 hour time frame, you guys can see there's an order block over here. You guys can take this as an order block. So I was looking for chapter actually, and if I go to a lower time frame and see, it's somewhat out of the kill zone. Let's see how the price works. Okay, so actually I can take a trade if the price comes here. I can take a trade like this, somewhat like here, but there's liquid resting below over here. So just imagine like if I take a trade over here, okay, and targeting these highs over here, and simply market makers model is somewhat like determining the bias actually, but it has much more confident if you guys are willing to take trades. Okay, according to weekly profile, guys. Okay, so over here you guys can see I can easily target 1 to 3. That's why I told you guys it's better if you guys are willing to take 1 to 3 and 1 to 4, but it's much more safe and much more less stress if you guys are using 1 to 2. So that's how it works, guys. So simply here it is the external range liquidity, and price must reverse back down. So I have taken this trade in at 8:45, but it's better if you guys are willing to take trades at 10 o'clock. So over here, guys, it is also an order block, right? This place is also an order block, and I can easily keep my stop loss below over here or else over here. So most of the time I recommend you guys to take like 5 pips, 7 pips stop loss, because it will make you guys actually like if you guys are willing to take trades like holding more or something else like that, it's better to use larger stop loss and in logical areas. But in these scenarios, like taking quick easy outs like this, it's better to have 7.5 10 pips stop losses. So that's how the market works, guys. So this is the external range liquidity. That means this should be your silver bullet drawn liquidity. So after purging this liquidity, you have to exit your trade or else manage your trade if you are willing to hold it furthermore. And simply this is the concept, guys. So if I go back to another day, like it's Monday, and when it comes to Tuesday, yeah, over here, let's look on okay, guys, over here there's a high has been taken out. Over here high has been taken out, so I'm expecting a sell, but I don't recommend you guys to do this. If you guys see a sell movement like something like this, you guys can easily take trades. But over here I don't see an entry model, because I usually take entries according to 2022 entry model. So simply like this, guys, wait for buys. Actually you guys can take trades from here. So here it's a order block, and if the price is over there, look for confirmations, guys. Go back to 1 minute or something like that and look for confirmation. Over here you guys can see there's a market structure shift happened over there. You guys can easily take a trade like this, and if I make the session indicator, yeah, let me see, it will go to take profit levels. Yeah, I recommend you guys to use 3% for the week, because like if you make 3% for a week, it's 12% a month. So that's how the market works, guys. Actually, it's basic psychology. Okay, so just imagine like you are risking 1% for a trade and you capture this one and you are done, guys, trust me. And you can easily take this trade again and again, because see, the market will come back down to this area, and simply imagine, see how it works, guys. You can easily do this. Actually, I recommend you guys to trade on kill zones, because you guys can see the power of kill zones, right? So you can easily capture your trades for 20 pips if you are using this thing. So simply this, the concept is, if you guys are using market makers model, you can easily trade frame. It's a confluence and it is the base of your trades. So using market makers module and having a clear idea of liquidity will make you profitable, guys, trust me. That's how I went to profitable stage. I was using support and resistance back in those days, and now actually I can see a big difference using this market makers model. So the same scenario applies to market makers sell model. Nothing that much big difference is there. And hope you guys learned something from this video. If so, just hit me up on the comment section if you guys have any suggestions or anything like that, and make sure to hit the subscribe button and share this video as much as possible. Peace.